All right. Good evening, everyone. So good to have you with us. My voice is barely holding up. I'm still in recovery mode, but we are on. It's Thursday night. Had to miss it on Tuesday because I was in bed like before 7 fighting this flu. So aside from that, we're here. Thank you so much for being flexible and jumping on live with us tonight. Otherwise, catching this recording later. Got loads in store for us tonight. So for those of you who haven't figured it out yet, you actually got an update today. So Dad's going to run through what is in that update very, very soon. And then some cool stuff about how to get early entries. And at the end, I'm also going to be finally showing big reveal of our new branding. So tonight's the night you guys will get to see it. And then we're going to start rolling it out. So without further ado, I'm going to hand it over to Dad so I don't lose my voice. And let's dive into some trading. Dad, let me find you, pin you. And
cool. I am here. Hopefully I'm coming through loud and clear.
Yes.
I'm slowly recovering from my flu. And hopefully my voice will last. It still gets a bit crackly when I talk too much. So hopefully it's going to last. But welcome. I've really missed these sessions. So it's really great to see some of your faces and to see all the names. And I trust your trading is all going well. Remember, the dream is we want to be free from the rat race. So this is a journey we're all on to become, hopefully, all of us professional traders. And remember, it is a marathon, not a sprint. It does take time to get there, but I believe it's well worth the investment. I absolutely love trading. You know, every time you win, you know, you're beating the banks, you're beating the financial institutions, you're beating traders who've been doing this for 20 years or more. It's fantastic. It's a great feeling winning. And yes, we do take losses, but remember, losses should simply be seen as a business expense. It's part of our learning process. But really is the dream, you know, that we only have to work, you know, 2-3 hours a day at the most, and we can end up earning a very, very good income. So I'm going to jump straight in and start sharing my screen. So I think you've set me up already. Let's see if that works. There we go. That should be the one share. And then I'm normally going to make some adjustments. I've got all these amazing faces. I can see Mark and Zeph and Wayne and Les and Ali. So from the Netherlands, Australia, we are from all over. So I've got gold on here tonight. But actually, let me just show you something this morning. So I realize what you see, you remember. So let me just quickly look at a signal on the Dow this morning. So if I'm just going to go to the Dow on the 1 minute. So this may take a while to get there. And this is something I want to say is never enter a trade on a doji. Now I use Heikin candles. So I want to just show you this morning, just one signal. So there was that massive move. You know, it's funny, I was saying to look at this move this morning. I was saying to Ty that I never used to look really at the open. But I tell you, lately, there's been these massive moves when the market's open in the morning. So when I'm not working, I'm going to keep an eye open. Okay, this is what I want to look at very quickly. So this is the Dow on the 1 minute. Can you see I never enter a trade on a doji? If you had entered on this signal, you would have got stopped out, which would have been hugely frustrating. And so what I like about Heikin candles is obviously bearish candles have flat tops and bullish candles have flat bottoms. And so if you're looking at this trade, which I was this morning, I never would have pressed sell on that candle. Because remember, a doji candle is an indecision candle. And so I would have waited for something like a flat top there, a nice bearish candle, then the trade run, that would have stopped you being stopped out. So remember that. If you remember anything tonight, don't enter a trade on a doji. So if you're going for a sell, wait for a flat top. And if it's a buy, go for a flat bottom. So I just wanted to point that out. So let me change this back to gold. We're going to look at gold tonight as our main chart. Right, here we are. So let's just get this adjusted. There we go. So quite a lot to say tonight. And hopefully my voice will go the distance. By the way, if the indicator ever times out, remember this table uses a massive amount of processing power. I've absolutely maxed what TradingView allows an indicator, and I could look on the indicator and the programming. This takes up 90%. But remember, if you get a timeout occasionally, you may get a little red exclamation mark. All you got to do is simply go here and just click plot reset. You don't need to reload the indicator. We used to say that a long time ago. If it times out, you know, delete and reload. All you've got to do is press plot reset, and you'll be good to go. All right, so update tonight. You should have got it already, but there are a couple of things. So the big thing is that we've decided to bring back buy and seller momentum. All right, so you can see I've made it a little bit simpler. So here you can see it is just this little wedge. I call it a wedge. It's really just a blank label. And what I've done to make it less noisy, before it was super noisy because we had a diamond, quite a big diamond below for a bullish momentum, and we had a red diamond above for bearish. Then we also made it quite complicated because we also had boosts and rockets. What was our thinking? So it became very noisy. So I've been working on just fine-tuning the buyer and seller momentum. I believe there's a lot of value in it, and it'll help us in our trading and help us to get pips. And I'm going to reference it quite a bit tonight. Gee, was this a signal down gold? That's a nice move. Wow, look at this. This signal has rocketed up. Let's just see how many pips that was. Always my measurement doesn't always work that well. There we go. Gee, that was 75 pips. That was nice. All right, so we brought it back. I remember, thanks to Brendan, maybe think, because he said he missed it. When we took it off, he said he missed it because it's great to re-enter trades, which it really is. And so just to give a bit of definition what it is about, it's basically, it's just in trading, there's a constant wrestle between buyers and sellers. All right, so there we can see there's seller momentum, a little red label. Sellers are constantly trying to push price down. Buyers want to push price up. So there's this constant wrestle that's taking place. And for us as traders, it's good to know where the momentum is going, especially if you're in a trade. And so this little icon tells us basically where the momentum is lying. For example, here, price moved up strongly. Then we can see sellers try to push price down. Buyers jumped in, try to push price up. By the time we got a buy signal, we already know momentum is back with the buyers. That gives us greater certainty. And now again, we can see maybe this move's come to an end. We can see that here sellers are trying to push price down. All right, so it helps us to know where the momentum is lying. Is it with the buyers or is it with the sellers? It's basically telling us who's in charge. Now, remember, I don't often say this, but well, I do say this, but I don't show it. Everything is completely editable. So if you go to style, firstly, the default of this is off. So you need to turn it on. It's right at the bottom. So if I click that off, we just don't want to overwhelm, especially new people. If you click it off, then you will see that these eventually will disappear off the screen. There's a lot in there now, so it's taking a little while to calculate. Now it's off, and then you turn it on. So the default is off, and you can see busy calculating where to place them, and there they appear back on the chart. But if you go to style, you can see it's similar to what it was before. Buyer and seller momentum. You can also check it off there if you wish, but that will always stay on. You can change the color. And if you click on the little label up, I mean, you can change it to a circle, you know, a cross, diamond, flag, X cross, triangle, up or down. You can also put it, you know, below the bar or above the bar, which is the candle. So you can edit it, but I just felt there's less noise. The one reason why we took it off with the rockets and the diamonds and the boost, it made a lot of noise. So I've tried to make it as subtle as I can by just having the small little label above the bullish and below for a bearish. So it's very good. As I said, it's really good to show if there's a shift in momentum. So it tells us early on if momentum is shifting from sellers to buyers or from buyers to sellers. And also, I mean, it may be a bit late, but you could also exit a trade. If you're in a trade and you see you're in a buy and you see seller momentum, it may be a time to exit the trade. But where it really is good, what I really found it had value before was giving us an early warning before a signal. Excuse me. So most times you will see for a buy, it's like an early warning signal. When you see a buy momentum, a little icon appear, then you start getting ready to load because you're likely to get a signal. If that takes place at the same time, then it's a very powerful signal. So if that little green icon appears on top of a candle that's got a buy signal, that is definitely going to move. So they use completely different data to calculate. So you're basically getting different data on the same candle telling you that that trade's going to move. So likewise for a sell, if it happened to be a sell signal over there, if you get a sell signal, plus you get seller momentum on the same candle, that's also a good indication that trade is really going to move. So it gives us early warning, early entry for buy or sell. And as I mentioned earlier, it's also great to enter an existing trade. We'll look at some examples as we go through, look at gold tonight. So it's a strong indicator of telling you you can re-enter a trade that's already running if there's been a pullback. And of course, it's also a great confirmation. If it, as I said, if it appears above, even before, or it could appear after, but it's more unlikely, it's a great confirmation that the trade's moving in the right direction. So remember, it will be noisy and rain. So when price is going sideways, you can see there will be a few more signals. When there's a bit of range, they will pop off. But I think the benefits far outweigh any of the cons. The pros definitely outweigh the cons. So we're going to look at some examples. And the other thing I've changed, which is pretty big, is I've adjusted the 55, the EMA 55. So, excuse me, I'm just going to have a little sip of water for my throat. I've said there's two secret sources in this indicator. Everyone needs to have an edge with this indicator. And so the two secret sources, one, of course, I believe is our histogram, changing color to bright, but the other one is our 55. So I've been working on the 55 in my spare time this week, and I've tweaked it. So what is good with this 55, I'll show you an example later, is it tends to change color up to 4 candles earlier. And so it's a huge, huge early warning that price is going to move. So basically, it tells you that the trade is highly likely to move. So you can see here it went bright green, and while it's bright green, you can see price is moving. So I'm going to reference it a bit more later, but we'll look at some examples, but it's huge. So once this line we can see here, when bright green in that candle, boom, price shot up. When bright red on that sell signal, price dropped. And so that has been hugely tweaked. As I said, it's like up to 4 candles. I looked at one trade today. It goes bright up to 4 candles earlier, normally between 1 and 3. So it gives you a greater early warning that the trade is going to move. You can also, I've thought of even making it thicker. So I mean, again, you can edit everything. If you go to style, you go down to our 55. Here it is. It's got 4 colors. Remember, the bright colors are the strong trend. You can click on the color. You got to click on each one. And here I'm changing the color thickness to 4. So I'm going to change all of them to 4 quickly just to show you how to do that. And so now you can see that that is way thicker. So I really want to encourage you to look at this 55 and to take note of when it changes color. Obviously, bright green, price is moving up. Bright red, price is moving down. So before I look at, maybe entering trades earlier, let's just have a look. So there's something for the beginners, and then a lot tonight will be for the more experienced traders. So some things, if you're not experienced, you just stick to the signals. But let's just have a look at a couple of signals this morning. There were 2. Where are we? So let's have a look here. So basically, just always look for strong signals. Signals that are strong are when we have the line between the 1, the 3, and the 8. So let me just put a vertical line through this signal here. This was this morning, 8:40, and now that and sync globally. So let's just see where that line appears. It's already appeared on the 8-minute. Let's pick it up on the 3-minute. So what time are we looking at? That's still this afternoon. Where are we here? What have I done wrong? Have I gone too far back? Here we go. All right, so remember the key thing is one of our rules. We got TAS for trend zone alignment, then for the angle of the 21 and for space. And so the key for our strategy is aligning high time frames. So in other strategies that we've tried before, there wasn't that emphasis at all on looking at high time frames. But I really believe it's the safest way to trade. And so basically I look at the 1, the 3, and the 8, and we always look 3 higher. And so remember, strong signals are when there's alignments on all 3 at the same time. And remember, high time frames bully lower time frames. So if we look at this signal, it wasn't perfect, but here we got a signal. What is good about the signal, we can see there's a bright red sell signal. That's a good indication the trade's going to move. If we then look on the high time frames, already it had just separated on the 3-minute. We hadn't quite crossed over on the 3 on the MACD, the trend zone, but it was bright red. But if we look at the 8 minute, we can see that this was, I would call it jingle all the way. On the 8 minute, we got separation on the main trading trend zone plus on the MACD. So that is a trade that would have definitely was going to run. You can see how far this one went. Not sure how many people took that trade, but that was 175 pips. So that was a huge trade. But again, we can see we had nice alignment between the 1 minute. 3 was almost perfect. 8, absolutely perfect. That made the good trade. If you were conservative, you could have maybe waited and entered over there. That's on the crossover. You wouldn't have lost many pips. That would have been 100% because then everything would have been fully lined up. There was a triangle down, and there also was a bearish crossover circle on the MACD. So you could have waited a bit, but as I say, high time frames bully, lower time frames. So that one would have been a great trade. So those, remember, you don't need hundreds and hundreds of pips to become wealthy. You know, one of my mentors said in the early days of training, all you need is 30 pips a day. So you don't need to be taking lots of trades. I mean, I've changed so much hopefully as I've matured as a trader. I'm taking far less trades. I waited like the other day. I mean, I was doing other things in between, but I waited 3 hours for a 40 pip trade, but that was just the winning morning. There was no losses, one trade, 40 pips, more than my daily goal. And that's what it is. When I looked at my old trading book, I would sometimes do 10 trades in the morning. I was clicking on everything that moved, but it's not necessary. I want to encourage you just to be patient. And these are the kind of setups you need to wait for. There was another one a little bit later. Let's just look at that one. We're just looking at really good setups. This is just after the open this morning. This one really ran. So let's just mark this one out here. So let's put this on here at this. Let's just analyze this signal. So I'm basically showing the signals that are really, really strong and healthy. So this is almost identical to the previous one. So there we got a sell signal. It's bright red. That means that's definitely going to move. If we then look 3 time frames higher, it's almost the same. The MACD hadn't quite crossed over. We were 1 candle away. But if we look again at the 8 minute, that was also jingle all the way. That one was going to move. Huge separation on the 8 minute, on the main trading trend zone, plus also in the MACD trend zone, great separation. So if you were conservative, you could have waited. If we just moved this across, you wouldn't have really needed to. You'd have waited a few candles, and that that wouldn't have been a late entry. I remember Wayne asking about late entry. Provided you're entering on a signal, it's not a late entry. All right, so you could have waited for the crossover, but I think this one, because the 8 minute was fully aligned, that trade was definitely going to move, and that was a huge move. There was a pullback, but if you look at that move this morning, if you got in early, that one dropped 330 pips. So that was a huge move. So those are the knock it out the park ones. When you see alignment on 3 time frames, remember, if it's aligned on the 1 and the 3, that's good, but not in the 8. Maybe go for TP2 because it may not get there. Because if the 8's not aligned, you are going to get a pullback. Even when the trend zone is not, I want to just show another example before we look at a few other things. Let's just look at this trade. It wasn't ideal because the trend zones, our zones weren't aligned. Let's just think that globally. But still, this one, I think, still hit TP3. So if we look here, we can see, as I say, we were below the 987, which is not ideal. But still, this trade, I think it just made TP3. There was still 40 pips. I mean, that's a great trade on gold. But you can see this one was also complete alignment. We had, obviously, you wouldn't get a signal unless you align on the 1. On the 3 minute separation, we got it on the crossover and with the triangle up. And we can see the 8 minute had been long separated, plus there was also separation. So all the zones lined up, although zone alignment would have been orange, we can see, although it was almost like a counter trend, because all 3 zones lined up, it was going to move. Obviously, there was a pullback you would have to sit through. But those are the kind of, I want to encourage you is to be patient and wait. Don't shoot at every signal that fires off. Wait for the alignment, especially on the higher time frames. And that way you'll become profitable. I mean, it's almost every single time. It's almost like 100% success rate. If you wait for 3 zones to align, it's hard to make a loss. Every single one is likely to at least reach TP2. All right, so now what I want to look at is just when can you enter trades earlier? And actually, I want to point out a few things here. So if you look at this, for example, this signal over here, what made this good? When you see, look at this, the 55 was bright red way before the signal. So that would have only gone red about over there. I put on the old signal just to double check. So when you see this thing turn bright red, that's really means it's a high probability that thing's going to move down. So by the time you get a sell signal and that thing's been bright red, the 55, that thing's going to drop. And of course, it did drop completely. All right, so I want to just look at some examples of when you could enter trades early. And so what's absolutely critical is to understand price action. Now, so if you are still learning, you may have another sip of water. My voice is slowly getting croaky. Is if you're a beginner trader, stick to the signals. But once you begin to understand price action, there are times you can enter trades earlier. And of course, you can make more pips. So basically, price action has to support entering a trade earlier. And one of the key things is, it's not my own expression, but it's a well-known expression in trading, is something called rejection of a line. So all lines serve as support and resistance in trading. And any line, if price rejects a line, there's a strong probability then it's going to move in the other direction. All right, so basically, I've counted about at least 7 lines that we can use in our strategy that price can reject to enter a trade early. For example, we can see, if we just look at this trade, we can see there's quite a lot happening here. Can you see how price tested the 55 continually? It tried to break through, it rejected it. I mean, for almost, how many minutes is that? 1, 2, 3, 4, 5, 6, 7, 8. I mean, for about almost 10 minutes, price couldn't break above the 55. And so price, in a sense, rejected a line. And so we can see you could have entered with price action. We're just going to maybe focus on the 1 minute now, just so it becomes clear for everyone to see. Price clearly rejected the 55. So here we got this candle. We got a nice bearish candle with a flat top. We can see we already have got triangle down. The 55, the MACD hasn't crossed over yet, but because we rejected a line, that could be a valid entry on a trade. We also rejected, you can see here's a daily pivot. So a pivot is another line we can reject. In fact, I'm just going to read them out and then we'll look at examples. So rejecting any EMA, which are our trend zones. So this is the 55, the equivalent of the 3 minute. If you reject any EMA, that can be a license to enter early. We will look at some chart patterns. Chart patterns, if there's a clear chart pattern, then you can also enter a trade early. Of course, big round numbers are massive. If you reject a big round number, that's huge, especially on the Dow and the Nas, but almost every indice, currency pair, big round numbers are huge. Also, trend lines. I don't know if there's that trend line still showing here. It may have deleted, but we can see with this. Here we go. Look at this. So here's an example. Look at this. So here, this trend line was plotted from 20 to 6. Okay, so it rejected it twice. We can see one. There's another 5 minutes of rejection. There's another 4 rejections. Here's another. Look how many times price rejected that trend line. So you could have entered, although there was a pullback, because we did have there's a weekly pivot there to deal with a monthly pivot. But basically, you could have entered once you've rejected a line multiple times. Also, the POC. So here's a good example to look at. Okay, you would have said there would have been a pullback, but you rejected the POC 1. You rejected the 233, which is another, and it's green, which means that is bullish. You rejected a trend line. You also rejected a weekly pivot. I mean, that's 1, 2, 3, 4. Plus, you also rejected, you can see the 13 and the 21. So there's about 6 things that price rejected in that zone. And that makes that trade a high probability. So, I mean, that trade, what is that one? That shot up, 100 pips. So all these things, support and resistance lines, pivots, even this would have plotted a bit later, so it may not have plotted then, but any line Any line that price rejects, that gives you a license to enter early, even pullback support and resistance. So sometimes, I mean, I'm trying to look at some examples here. So here's an example. Okay, this would have been more risky, but you can see here's a pullback resistance line. Whenever you get a doji, this is important. When you get a doji that's sitting against a line like that, and then you get a flat top, price is always going to drop, because that means price is rejected. There wasn't one, you could say here we did reject it at this level. Yeah, actually we did. So it didn't print across, but basically by the time you got to the base of this candle, you can see that is sitting on that pullback support line. So you could have actually entered on that candle. Plus you can see that the 55 is bright green, and that thing doesn't flick on and off, on alternate candles. That's a good sign of that trade was going to move. And so there are many examples that if you look, you can see when price rejects lines, then you can enter trades early before you get a signal. And so also just looking at some other examples to look at here. Actually, let's look at a few patterns. So let's see what patterns there were. I think I saw some this afternoon. Let's just have a look going back. There were some nice patterns. Here we go. Look at this pattern over here. So here's one of my favorite patterns. Can you see this is called a reverse head and shoulders. So we can see here is one shoulder. That is called the head. And here is another shoulder. So this is a real classic pattern. And so whenever you get either reverse head and shoulder or a normal head and shoulders or what's called a double bottom or a W, you always need to draw a trend line to see when it's safe to enter. So if we drew a trend line from the top, and let's just see, it's that last high over there, you can see now there was a counter trend signal over there, but you actually could have entered this trade earlier because you've broken a trend line based on price action. These chart patterns are always very powerful. So you can see again, shoulder, head, shoulder. You draw a trend line, and once you break the trend line, you could have entered on that candle. Then your target would have been the 2, eventually would have gone up to the 233. So there was 100 pips on that trade. So you could have got in early. You can see other reasons. We've got a triangle up. We've already had a bullish crossover on the MACD, meaning the trend has shifted. Triangle up. Nice separation. You could have entered early. And plus, again, whenever that's what I like about Heikin-Ashi candles. Also, it's in the notes. I've got it in the notes. When you see this pattern, can you see there's a bearish doji bullish candle? That is a good pattern. And when you see a doji sitting on a line, that's also a good sign. The next candle is going to be a nice bearish candle, and up that trade went. So keep a lookout always for I'm always looking, let me just delete those. I'm always looking for those patterns. There was another one, I think a bit earlier. Let's look at that. We look at a few more patterns, because if you see these patterns, then you can definitely, excuse me, enter trades earlier. So was there another smaller one? Yep, I think this looks like one. Here's another one here. So this one's not as clear, but you can see you can see again, we got this, one of my favorite patterns. There's a shoulder, here's a head, and here's another shoulder. And then always need to draw a trend line to see a break of a trend line with this pattern. So we could just maybe pick. So if we drew a trend line down like that, we can see you could have entered this trade earlier, 2 candles before the counter trend signal. Remember, this is more for experienced traders. So what was supporting entering at that point? Well, there's quite a few things in support. So we look at what else the indicator is telling us. We do have a bullish crossover way back there. That's what we like about the MACD. Then we do have triangle up on that candle, triangle up, plus we got separation. And so, I mean, you could have delayed at one, and you would have got a nice buyer's momentum over there. But that would have been, you could have saved, if you understand price action, that would have been a great trade to enter. You can see again the same pattern. There's a bearish candle, then a doji, then a bullish, and away you go. So keep a lookout for those patterns. I mean, I love looking for these patterns. So I'm always, when I'm trading, I'm drawing lines, looking to enter. Now, they're not foolproof. It's not every single time, but do look for support. And I don't think I mentioned for this one we looked at here. Let's just have a look. Where was that other pattern? I forgot to say what also made this one. So there was, remember, that was the shoulder. There's the head, there's the shoulder. We can see we rejected this area around the daily pivot. There we can see, look at this candle, how it rejected a pivot. So almost to the millimeter. That's why I love these pivots. It rejected a line. So by the time we could have entered on that candle, there's a good probability that trade is moving up. I want to say what you're going to see happen again. I can't see an example. Let's see if there's an example. With buyer and seller momentum, with counter trend trades, I can't see an example. No. But with buyer and seller momentum, I have adjusted the settings. If you get a counter trend signal, I don't take all of them. So I'm more of a conservative trader. But if you get a counter trend signal, and at the same time, you get, for a bullish one, you get buy momentum on top, that becomes a very high probability trade. So keep an eye out now for counter trend signals with buyer and seller momentum. So let me just mention a few other things. There was also a nice pattern I wanted to point out from this morning. So let's just have a look. I think it was over here. So if you have a look over here, so sometimes, always be drawing trend lines. Give me another sip of water. I'm always drawing trend lines, and sometimes, they're huge value. Let me just shrink the screen slightly. So if you look at this price action over here, so this was from this morning, then if you drew a line across here, this would also made this trade a good trade. So you can see we had this huge wick and the market reopened at 10 o'clock over there. But the trend line is still valid. So if you're drawing a trend line, we can see that price broke that trend line. That could have been another. I said you could have entered for other reasons, was rejected multiple lines, but you also broke this trend line, meaning that that candle could have been a valid entry. And so also that trade run, when you see that kind of pattern too, I often do this. This is quite fun. So if you draw a vertical line from your trend line and you put it on your opening candle, let me just get that square. On your opening candle, let me just, it's disappeared. Let me just bring that to the front. Visual order, bring to front. If you take this line across and you place it on your opening candle over there, can you see how almost to the millimeter that trade before a bigger pullback hit that target? So, that could tell you, that can help you stay in trades longer. So that again was, almost the 200 pip trade right over there. So keep an eye also on trend lines, especially even through the close and the open, they stay absolutely valid. So other things to enter early. So I've mentioned the main lines. I mentioned 7 lines, EMA, chart patterns, big run numbers, pivots, trend lines, POC, pullback and support. So those are 7 lines I'm always looking for entering a trade early. But also, you can also enter a trade earlier based on the histogram. I kind of did point that out. So let's just see. I don't think this one was bright on the, was it? Yes, it was. So here on this candle, hard to see, it was almost 0, but you could have entered on the histogram going bright. So this is one of the secret sources. So if the histogram goes bright, you can also enter a plus on a triangle up or down, and a circle that's useful to remember. And then again, I did mention this, once this EMA goes bright, you can also enter a trade early because it becomes a high probability trade. And so also buy and seller momentum, we now put that icon back. And also I've mentioned the bearish doji bullish pattern. So all of those are very helpful in entering trades early. But again, you do need some experience. If you are a beginner, try and stick to the buy and sell signals. They'll be far more helpful. And I think, Ty, that's probably it from me tonight. Hopefully you've learned something. My voice is kind of running out now, so I'll probably have to stop talking. We are going to do a live session tomorrow at 5:30. So hopefully my voice will refresh overnight. I don't know if there are any questions, Ty, but I'll just hand back to you.
Oh, there's a couple. So let me rattle these out quick. Firstly, there's one from Zeph. So he said, would you consider a trade when all three trend zones align, even though you might have orange on the zone alignment?
Yep, I mean, look, you've got to weigh those up, but they definitely mean if you have three time zones aligning, 1, 3, and 8, but your zone alignment is out, I wouldn't maybe aim for TP3, I'd go for TP2. But then often my target would be what is in the way. So you can see clearly here, price shot up and really respected the 987. And so then my target would be probably TP2 or the first EMA that's in the way that's caused this zone alignment to be orange. So I definitely would take them, yes. 3 in a row means it's definitely going to move at least to TP2, just lower my expectation.
Cool. All right, a couple more questions. Mark said, let's just check. First he said a jingle all the way t-shirt. Then
that's my saying for if I'm so certain of a trade, I just call it jingle all the way. Amen.
There you go.
Yep.
So then he had a question about, is the crossover on the 21 earlier than the MACD?
It depends, you know. Generally, the MACD always comes first. So most of the time, because it is so good in terms of picking up the change of momentum. So I would say 90% of the time, definitely the crossover on the MACD comes before. So if you just go and back test, you can see the crossover on the 21 is over there, MACD is over there. And so you just got to be out of range to check. So there, it's almost on the same, but most of the time, the MACD comes way earlier. So look at the sell, crossovers over there on the MACD, and here it's probably 2 candles late in the main indicator.
There we go. Okay. Next question.
Okay,
Tim's got a question, which I think is an easy one, but he said he already found the divergence lines on the MACD helpful. Is it possible to have the option to turn them on and off? I'm pretty sure those options already exist.
Yep. So here we go. I'll show you right away. So you just go to settings. And you go to inputs. And histogram divergence lines.
Bam.
And MACD. Under inputs, and give it a few minutes to calculate.
We just wanted to make it as clean as possible by default out the box, but because I mean, reading divergence is definitely a little bit more advanced, and we just wanted to make it as simple, and beginner friendly out the box, and then but it still has all the power factor in there to be able to customize it. So what do you know?
I mean, look here. There's bullish divergence. It's listed down at the bottom. Bullish divergence, and boom, price goes up. There's bearish divergence, price falls. So, I mean, it's very useful, but I mean, I'm used to reading it without the lines. So we just did it to declutter, but of course they're all there and they work well. So there's another little bearish divergence, price drops. So, excuse me, we just have the default to off.
Very cool. All right. Oh, thanks, Dad. That was loaded.
Okay, I'll stop share and I'll hand back to you.
All righty, let me pin myself. It's time to have some, let's just see. Did you turn off your support? I'm not sure what Mike means by that one. Not sure. But
No.
My question, I accidentally pushed enter. I didn't want to ask this, but did you turn off your support and resistance zones? Because I didn't see any single one of those.
Here they are. I mean, they definitely have not been turned off.
But my iPad.
The previous ones do get deleted to save memory for the indicator. So it only plots 2.
Okay.
So you have to go to playback, to replay trading.
okay.
Sorry, I'm not
Then I'll have to go back to actual candles.
Actual candles to go back to backtest. A lot of stuff I delete to keep the chart clean and also to save memory because there's a lot in this indicator and I've maxed it out. So I only have 2 plotting at a time. The current support, the current resistance zones.
A lot of lines everywhere, as if we don't already, right?
Yeah.
All right. Excuse me, guys.
Thanks so much, Tim and Ty.
My voice
Take
is
it
like
easy.
just hanging out, but I've been sitting on this next announcement for long enough, and before, let me just do this. Let me get Dad out of the way. So most of you know a bit of the story. Dad and I, Dad's been working on TrendForce for ages now at this point, 18 months at least. And even just launching this in November when we did, we weren't exactly ready to. We were going to take our sweet time, build a website, do the branding, and then, launch it as professionally as we could. But what's the word I'm here? The demand for it from all of you guys was overwhelming. After we gave an update on where we were up to, everyone just said, can we have this now? And to prove the point, none of you guys on here with us tonight need the branding or need the website. But we have now at least got our branding well and truly looking beautiful and crisp. So I'm going to show it to you tonight for the first time. And massive shout out to Tim, who's on here from Rebrand. They did an outstanding job working with us, doing hours and hours of whiteboards, hearing our story, hearing out Dad's story, my story, who we are as a community, taking all those things into consideration, and then going to work and designing something that we really, really love. So I'm actually going to show you a video. It's only 30 seconds long, but I'm cut out the middle. You're going to see the full version, the final version of this video within a few days in the Facebook page, in the Facebook group, The Fit Life, which I'll be rebranding soon as well. But I'll at least be able to show you the first few seconds in the end, and you'll get to see the branding on that. So I'm going to share my screen and crank this volume, and then let's get into it. So let me just turn this mic this way. Hopefully you can hear this, but here we go.
Everything is changing. We're entering one of the most important financial windows of our lifetime. It's part of a repeating 18.6-year economic cycle that has predicted every major boom and every major crash over the past 200 years. This is your time to grow your financial skill set and start trading smarter with TrendForce. We'll see you on the inside.
There you go, team. We have got our branding all sorted. So let me unshare. Hope you guys love that. I haven't actually got the logo as such in front of me. I just had it in that video. But I can't wait for you to see that full video because there's a couple more minutes to it. And my brother Mikey's done an outstanding job of a custom track behind the whole thing. So, I can see you guys lighting up the chat. You like that? Very, very cool. Well, the next phase is in here. So this is what I need all your help to do. So you'll remember the Fit Life. This is the Facebook group that we were dominating, that I started a few years ago. 2,500 people in here. I'm going to be changing this to TrendForce. I'm going to be relabeling it TrendForce. I put a little video update in here saying I was going to do that a couple weeks ago. When I make these updates and when I drop this video into this group, I need you guys to do me the biggest favor and go light up the comments on that video like crazy. And feel free to add as many of your friends to that group as you like, because we're going to continue to use that group again and dump as much free content in there as possible to help people figure out if this is what they want to do, right? So that is the plan. Otherwise, tonight, I'm going to start rolling out our branding on our group chat and Messenger. We're going to have our TF icon on there now, finally, and a few other bits and pieces here and there along the way as well. But guys, super excited to finally have something professional that represents all of us. Yes, there will be t-shirts and hats and all those wonderful things that we'll be able to get fired up for everyone at our live events and things. So in the meantime, though, that is that. I'm just excited to get it all happening right now. I've been sitting on it for a little while, still working on the website, got a few things in the mix, but that video is almost done. I think there's like 60 layers of music on it that Mikey has done. So it is going to be absolutely lit. Anyway, we'll play that in a couple days when it's done. Otherwise, hope you all have an amazing rest of your evening. Thanks so much for tuning with us live tonight. Thanks again, Dad, for those updates. The buy and sell.
Pleasure.
Being back is awesome, and also just the increase in that sensitivity to 55 is absolute gold, and teaching us how to enter a little bit earlier. So I hope you guys got that. If you are new, the caveat for that is don't try to enter early if you're new. Try your best to rather just stick to signals, and get your head around price action, but just be patient, give yourself time. What Dad said there was quite profound. I don't know if any of you caught that. He waited 3 hours to click the button, and he took his 40 pips. And his trades are in and out, as opposed to 10 different trades inside of that hour. Practice patience. It is a frustrating thing. The only way to grow it is to practice it. So otherwise, guys, yeah, Mike, I can see I'm speaking to you right there. You give me the fists. Patience. Okay. Well, that's it from us tonight, guys. Thanks again. And tomorrow morning, 5:30 a.m., we will be here on Zoom trading.
See you at 5:30.
See you bright and early, team. All right. Good night, everyone. Cheers. Bye.